Stanley Druckenmiller is betting against the US dollar. Why he thinks the Fed is about to cut rates. Stanley Freeman Druckenmiller is a billionaire hedge fund manager and investor. He was born in 1953. He founded his own capital management firm in 1981 at age 28. Today, we are going to look into his $2.2 billion diversified stock portfolio. And we are going to look into why he is shorting the dollar. The market turns heads fast. 1 minute, she is angry Black Widow, and everything's turning red. The next minute, she becomes Goldilocks, and she's handing out all the candies to all of the kids. Why, you might ask? Well, it's her cycle. Let's just use Mr. Druckenmiller here, for example. His investment philosophy is to adopt an active trading style, similar to that of George Soros. What that means is it depends on the economic data we are getting that day. A big money move is being made according to inflation and deflation. Are we adding more fuel to the fire today or melting ice with the flames? It all depends on the investment clock or asset rotation. We are going to explore that today. Why he thinks the Fed is about to cut rates. I will explain it all right after this.
How you like that?
Welcome back, everyone, to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do. And push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my new website. And if you want to check it out, please go to audaciousmoneywitch.square.site to check it out, and let me know what you think about it in the comment section below. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore. You want it to be real. You want it to be true. You want to be my client, don't you? And here's my client's collaboration book, Adversity Equals Success. Such an amazing book with such incredible authors. Order your copy today. And my client Teddy Eazzy's book, Wicked Pussy Perfume. It is a femdom novel, and it's about money, stockings, and the stock market. Order your copy today. Druckenmiller said he is shorting the US dollar. Speaking at an event hosted by Norway's Sovereign Wealth Fund, he said the move is his only confident trade in what he sees as the most unpredictable period of his career. One area I'm comfortable is I'm short the US dollar, he said. Currency trends tend to run for 2 or 3 years. We have had a long run higher. The US dollar index, which compares the greenback against a basket of other global currencies, hit 20-year highs last fall, thanks to aggressive monetary tightening from the Federal Reserve. But it's a rally that Druckenmiller wasn't a part of. It probably the biggest miss of my career. He was saying that he missed the 20% gain last year from UUP, which is if you want to long dollar. In hindsight, short treasury last year would be more profitable, but the Fed didn't see inflation coming. The dollar has fallen by nearly 10% since November. But the Deuce Quen, Capital founder, said the downtrend is not over. That's because he thinks the Federal Reserve will soon have to start cutting interest rates to respond to an economic downturn. Druckenmiller also cited the dollar's weaponization as another factor in his short bet, alluding to Western sanctions on Russia last year that froze its foreign exchange reserves in response to Moscow's invasion of Ukraine. But for many dependent on the dollar for trade, the move sparked efforts to use other currencies. Druckenmiller pointed to Brazilian President Luiz Inácio Lula da Silva, who recently called for the BRICS countries to create a new currency. And you have a Lula running around asking why we have to do trade in the US dollar. And he's right to, Druckenmiller said. One reason we know from his portfolio is that Druckenmiller is long both Bitcoin and gold. If you want to know his rest of the stock picks from 2022, keep watching. There are 5 reasons why Druckenmiller thinks the Fed is about to cut rates. That's just the opposite of last year. Last year, dollar rise, long bond down, rates up. This year, he expects dollar down, long bond up, and rates cut. Here are the reasons. Number 1, we were warned that a great commercial real estate crisis would be coming, and now it is here. In fact, we just witnessed another massive default. Number 2, we were warned that there would be widespread layoffs as economic conditions in the United States deteriorated. Sadly, that is now happening all around us. For example, on Monday, accounting firm Ernst & Young announced that they will be laying off thousands of highly paid workers. Number 3, we were warned that the largest corporate debt bubble in the history of the world would eventually burst. And now corporations are beginning to default on their debts at a rate that should deeply alarm all of us. Number 4, we were warned that we would witness a dramatic surge in bankruptcies in 2023. And that is precisely what is happening. Number 5, we were warned that the rest of the world would eventually start rejecting the US dollar. And now de-dollarization is happening at a stunning pace. That's why the Fed will have to cut rates soon. U.S. economic growth slowed to an annualized and seasonal adjusted rate of 1.1% in the first quarter of this year. As businesses rebalance their inventories and pulled back on spending amid punishing rate hikes from the Federal Reserve, the slowdown in gross domestic products, the broadest measure of economic activity, was far below economists' expectations of 2% and represents a much slower pace compared to the previous 2 quarters. The January to March period was also marked in its later weeks by mounting fears that a meltdown in the banking sector and a pending debt ceiling crisis could trigger a recession. The GDP report affirms that the U.S. economy has lost momentum in recent months, with many economists also forecasting a recession later in the year. The Federal Reserve has been striving for months to cool the economy, which has remained white hot despite 9 straight rate hikes. Business investments are often made through credit, so higher borrowing costs coupled with slowing economic activity can curb those investments. But that also varies depending on the size of a firm. Speaking of the size, it matters. Do you know Bed Bath & Beyond is still trading at $51 million? What? $51 million? Bed Bath & Beyond made plenty of mistakes that led to this week's bankruptcy filing. Among the most consequential was the $11.8 billion it has spent since 2004 to buy back its own shares. The $11.8 billion Bed Bath & Beyond spent on its own stock since 2004 comes to more than twice the $5.2 billion in debt it had on its books. In its most recent SEC filing, a debt load that proved crushing for the company. It's a sad situation for this meme stockholders. Now let's look at what kind of stock Druckenmiller holds in his portfolio. 18% of the portfolio is in healthcare Lilly and Corporation. It's a big pharma corporation. He bought in at $323. 23% of the portfolio is in technology. Meta Platforms, he bought it at $125 per share. Nvidia Corp, he bought it at $146 per share. AMD, his average price paid is at $66 per share. I also bought Meta at $100 a share. Back when Jim Cramer was crying, then it went to $88. I regret I didn't buy more though, despite how you feel about the company. We really need to take emotions out of it. When you're making investment decisions, there is no room for emotions. You need to put those aside, emotions. I have sold all my Meta shares as of this video. 14% of his holdings are consumer discretionary. Lamb Weston Holdings Incorporation at $81 per share. 14% of the portfolio is in energy. He bought Chevron Corp at $131 per share. Occidental Petroleum at $68 per share. From 2021 to 2022, inflation rises, growth recovery. We have seen Wall Street sell cyclical growth information technology stocks like Meta and Nvidia, and buy into cyclical value commodity oil and gas stocks. After inflation overheat peaks out at 9.1%, growth is weakening. Then Wall Street started to sell oil and gas stocks and start to get into healthcare stocks and utility. It's called defensive value stocks. And get into money market funds and get paid 4 to 5% yield. As inflation falls, we saw bonds finally bottomed. Big tech was back in play, but not small growth, because there is no growth recovery yet. Because the Fed hasn't cut rates yet to stimulate growth yet. So there is no reflation. That's why TLT has not popped yet. It's all waiting on the Fed now. TikTok. You are such a good boy for watching my video right till the end. Bye.